In today's episode, I'm going to reveal the best time of day to day trade. When it comes to trading, it's important to approach the market with consistency. The people that generally find success treat trading like a business. And like any other business, they have a business plan. And part of that plan is, of course, the strategy they're going to implement every day, the type of stocks that they're going to trade, and the time of day they're going to trade. Think about opening a restaurant or opening a coffee shop. Time of day is an important component. Most coffee shops should be open in the morning because that's when people drink coffee. Now, of course, there's people that drink all day long, but if you're not open in the morning, you're missing a huge window of opportunity in the coffee business. Well, trading is really the same. There are windows in the day where we can reasonably expect heightened volatility. I'm going to explain why in just a moment. So if you choose not to trade during those windows, you're most likely going to find trading a little bit more difficult. And worse, if you approach the market haphazardly. You show up a little bit here, a little bit there, you trade on your phone, but at odd hours, it's hard to really understand if you're struggling, if it's because of the inconsistency in the time of day, or if it's because of your own strategy. So it's really important to approach the market with consistency. And let's jump onto the whiteboard and start breaking it down when it comes to time of day. So the market opens at 4 a.m. Eastern Standard Time, and all times here listed are Eastern Standard Time. So the time of the stock market in New York City. 4 a.m. is the open for pre-market. The bell officially rings at 9:30 a.m. Eastern Standard Time. The closing bell rings at 4 p.m. and after hours closes at 8 p.m. So this is a long trading day. Now within this window, you know what? It's very interesting, but there are certain little pockets where we can expect to see high volume, such as at the opening bell. So right here, I'm going to do a little distribution chart, and I'm going to show you where I would expect to see the most volume on most stocks. Right at the open, and then decreasing as the day goes on. And then right here at 4 p.m., you often see another pop, and then decreasing down to 8 p.m. So, and then again at 4 a.m., you usually see a little pop, decreasing until 7 a.m. And then at 7 a.m., you see a pop that's usually bigger than at 4 a.m., and then kind of sideways here until we come down or come up to 9:30 a.m. where we see another pop. So these are the windows during the day where we tend to see the most volume. What do these correspond with? These correspond with the predictable times that companies release breaking news. So the breaking news is what creates the volatility in the market. In the morning, we have economic data that's released. So economic data like inflation numbers or payroll numbers, unemployment numbers, things like that. So when those numbers come out, and they're always the same exact time when they are released, those create predictable spikes in volatility. Well, a lot of companies put out their earnings statements in the after hours session, which begins right at 4 p.m. So that's why at 4 p.m., we often see this spike of volatility. So that's when you're going to see the earnings come out, especially for large cap stocks like Netflix, Apple, Amazon, Tesla, these big companies. They usually put out their earnings just after the closing bell. So then people are sitting and watching at 4 p.m. to see what the news is going to be, to jump on that momentum. If the news is good, they're jumping on it to trade to the long side. If the news is bad, they're selling or they're going short to maybe profit on the downside. But then after the news is released at 4 p.m., typically volume kind of dwindles until the final closing after hours bell at 8 p.m. Eastern Standard Time. So going into 8 p.m., rarely will we see a lot of volatility just in that last 5 minutes between 7:55 and 8 p.m. So for instance, if you decide to trade during this window right here of 7 p.m. to 8 p.m., that would not be a window where you can predictably expect to see volatility. There's just not a lot going on during that time of day. So if it was the case that that was the only time of day that you could trade, I hate to say it, but trading is going to be pretty difficult because there's just not a lot moving during that time of day. Well, on the flip side, you come over here to 4 a.m. Why do we see a little spike at 4 a.m.? Well, of course, on the U.S. market, there's a lot of companies that are actually international companies. They're listed on the U.S. exchange, but they're Asian companies or European companies or whatever. So those companies may have put out news earlier in their day on their time zone. And so the soonest you could react to that news is when pre-market trading begins at 4 a.m. So we do often see a little spike in volume at 4 a.m., which is based on news that came out overnight on Eastern Standard Time, but perhaps during the workday of the time zone where the company is actually located. The only problem here is that most brokers don't open until 7 a.m. So in fact, most brokers open at 7 a.m. and allow trading until 8 p.m., but very few brokers in the United States allow trading starting at 4 a.m. So 4 a.m. to 7 a.m. inherently is a lighter volume period of the day because there's just not as many people that can trade. However, there are some brokers that do allow trading as early as 4 a.m. And so I can give you the list of those brokers at the end of this episode, but most start at 7 a.m. And generally the commission-free brokers like Charles Schwab, Fidelity, Robinhood, etc., most of them don't open until 7 a.m. And I think it's not an issue of, I think it's really just like a customer support issue that if you allow trading at 4 a.m., then you need to be staffed with customer support to answer phone calls at 4 a.m. And they just don't want to do that. So they begin at 7 a.m. and that's when you can start getting people on the phone if you have problems placing orders, so on and so forth. So even the broker that I use allows trading at 4 a.m., but they don't have great customer support during those early hours. So if you got into a trade where you were in a jam, you're kind of on your own until, more people come into the office. So that's creates a little bit more risk trading from 4 a.m. to 7 a.m. And as a result, I don't do very much trading during this window. However, starting right at 7 a.m., and actually, this is 7 a.m. So starting right at 7 a.m., if we have a stock that is currently up, let's say we've got a stock that's up plus 87% pre-market at 6:45, then guess what? Coming into 7 a.m., there are a lot of retail traders that are watching that stock. So let's jump onto the screen share here for 1 second. Now I'm going to break down my profitability by time of day in a moment so you can actually see what my metrics look like. But before we do that, let's just pull up the scan. So I'm going to pull up my top gappers scanner right here. So on this day here, which was just yesterday, NVVE was our leading gainer, up 81%. So this is a stock that a lot of people were watching. The flame right here, and I'll just use my drawing tool so you can see where I'm at. The flame right here indicates that the stock had breaking news. The volume was 22 million shares. It had a very low float, very limited level of supply, and the relative volume on the daily chart was 1,412, which means it had 1,412 times higher volume than its 50-day average. The only reason a stock would have that kind of volume is because of breaking news. And the only reason it's up 81% is because it has a very limited level of supply, and because the news was good, a lot of demand came in. So this is all about an imbalance between supply and demand. But the result is, on a stock like NVVE, all of a sudden, traders at, let's just say 4 a.m., 5 a.m., 6 a.m., they are seeing it moving up, but they're not able to trade it because their broker doesn't open till 7. So then basically the second it's 7 a.m., 7 a.m. on the dot, boom, all of a sudden people look at that stock and they're already ready to buy it. So what ends up happening is right at 7 a.m., we see this spike in volume right here. So all of a sudden there's a huge spike in volume, traders are jumping in. That begins at 7 a.m. Now, a lot of companies also know that retail trading begins at 7 a.m. So they're not going to put out news typically at 6 a.m. before retail traders can jump on it. Well, some might, but typically they're going to put out news at 7, 7:30, 8, 8:30, and 9. They're putting out the news very carefully at a time when retail traders will not only see the news, but will be able to instantly jump on the news and buy the stock, right? Because the companies want that news to be received by traders in the market. And then they want to see that the share price of their company goes up. So they're going to release the news at a predictable time where traders will notice it. So as a result, between 7 a.m., at 7 a.m., 7:30, 8 a.m., 8:30, and 9, we often see, we call it the top and then the bottom of the hour, top and bottom of the hour, top and bottom of the hour, we see breaking news headlines are released. So those breaking news headlines come out, and then all of a sudden, boom, you've got a stock squeezing up. Now, if I pull up our screen share here again, NVVE, the headline on this came out at, I believe it was 8:30 Eastern Standard Time. So yeah, 8:30 Eastern Standard Time highlights a recent state of a New Mexico contract. So that was the catalyst that got this stock squeezing up. So their headline came out at 8:30, and basically instantly, I'll just show you the chart. So this headline comes out right here, and this is what happens. Instantly, the stock squeezes up nearly 100%, just like that, because the news came out and traders jump on it. And then from this point forward, you've got dip trades and trades off ascending support and breakout trades. And people now are just actively trading the stock. Now, before 8:30, this stock was not in play. So at 7 a.m., at 6:45 a.m., 4 a.m., in this particular example, this stock was actually not in play. It didn't come into play until the moment that breaking news headline was released. So this is the predictable time right now between 7 a.m. and 9:30 where we're seeing a lot of news released. However, right at 9:30, so let's just say this is the 9:30 opening bell. Typically, right at 9:30, we see a big spike in volume. Now, in this case, let's look at this chart and let's look at the spike of volume that occurred right there at 9:30. Look at that spike in volume. So all of this was pre-market trading, and you can trade pre-market with pretty much any broker. With some brokers, you have to change the time and force on your orders. So just as a quick little walkthrough of what that looks like, if you're over on Thinkorswim, for instance, you change your order from a day order to an extended hours order. You just change it from day to extended hours. Over on Webull, you change your order from day to day plus. So this is day, and then, oh no, they actually also have including extended hours. There's a different setting in the hotkey. But so for different brokers, there's slightly different settings. But once you make that change in the setting, then from that point forward, you can trade pre-market. And so now you can be executing orders in this pre-market session right here, which is when I'm typically trading. But at 9:30, there's typically a big spike in volume. So why does that happen right there? Well, the fact is a lot of traders don't realize that you actually can trade during your pre-market session. So this is pre-market right here. So this little stretch right here. And then of course, this is the trading day until 4 p.m. So if we thought about quantity of trading, this would be, well, let's see, maybe this is like, we'll just do it in ratios. This is gonna be 1x pre-market. This is like 3x here. This is probably 5x or maybe 6x. And then down here is probably like, 1.5x in terms of volume. So we see much higher from 7:30 to 9:30, even higher starting at 9:30, and then much less in the after hours session. So right at 9:30, a lot of retail traders who don't even recognize that they can trade pre-market are watching that leading gainer. So that's when they're doing the same thing that a lot of us who trade pre-market are doing at 7 a.m. A lot of traders are sitting down and saying, okay, NVVE is our leading gapper, up 81% in the pre-market session. This is the stock that I'm going to watch to trade at the 9:30 opening bell. So then you get that kind of second wave of traders coming in right there at 9:30. Now, there's also another factor is that commission-free brokers allow market orders starting at 9:30. Before 9:30 a.m., so market orders, stop orders, and options trading are only during regular trading hours, 9:30 to 4 p.m. So you can't trade with stops, market orders, or options in the pre-market or after-hour session. So as a result, a lot of traders do choose to just wait until the 9:30 opening bell so they can utilize market orders and utilize stop orders. So as a result, we do see more volume coming in right here at 9:30. However, I generally find that I actually am making more money between 7 a.m. and 9:30 because that's when I'm trading the volatility from the actual news that comes out. And then between 9:30 and sort of 10:30, that first hour of trading, we generally see very high volume, and then it kind of starts to wane. It sort of dips down. Why is that? Well, the stock has had the news, it's made the big move, and now, the easy trades, so to speak, are kind of done. So it's true that sometimes you'll have a stock that, has a nice move early, and if we did it as a stock chart, kind of pops up early, and then, this is 7 a.m., and then pulls back a little bit, kind of goes sideways, and then at 9:30, puts in another move, and then sort of pulls back. And a lot of times at this point, it just sort of fades, and that might be it. But sometimes you will have one that kind of pops up here at 12 p.m., pulls back a little bit, and then, into 3 p.m., it's squeezing up again. And then all of a sudden at 4 p.m., makes another move into the after hours. So that does happen sometimes. But this is more the exception than the norm. What is more typical is that we see the big move when the news first is released, and then a second wave at 9:30, and then it's sort of, at that point, it's like, all right, we've kind of gotten as much as we're going to get out of this, and traders sort of give up and move on to the next one. There's part of the business plan when it comes to trading is not overstaying your welcome. For those of you guys that are tuning in that are new, by the way, my name is Ross Cameron. I'm a full-time trader. I funded my first account back in 2001. So I've been doing this for a very long time. I will put a link in the description where you can download my small account worksheet, which is going to walk you through the strategy that I'm trading every single day, how I manage my risk, the 5 criteria I use to select stocks like NVVE to decide that this is the right type of stock to trade. And then I'll share with you my entry and my exit indicators. So make sure you guys download that PDF. You can use it as a resource in your own trading. I think it will help you. But as always, make sure you practice new strategies in a safe, simulated environment before putting real money on the line. So this is sort of the window where, for me, I'm finding the most success. And I really think that when it comes to trading, not overstaying your welcome is critical. So getting in, getting green, and then locking it up. So now let me show you my own trading metrics. So these are metrics that are going to be based on, well, gosh, all of the trades in here. I've been using this software since 2016. So this has a total of, let's see, $15.4 million in trading profits. That is real money. I'll tell you right now, my results are not typical. I have been doing this for a long time, but that is real money. So we're already on the days and times column or category right here. So first of all, we could look, just if you wanted to, at day of the week and what day of the week produces the most profit. And you would say Wednesday, and you would see that. And so you might think, well, geez, I should just trade on Wednesdays. And maybe if you're a part-time, worker and you're trying to figure out what days of the week to trade, Wednesdays might not be a bad day. But I don't make the most money just because it's Wednesday. It's not like Wednesday we have companies that put out better news headlines. This is actually part of my business plan. So I'm a very conservative trader. And I know that's going to sound not believable because I'm a day trader, but I actually am. I'm very risk averse. And so what I do each day is I start by building a cushion. So I try to get a couple of small green trades, build a cushion, and then once I've got profit, only then do I scale up and get aggressive, which means if I'm having a tough day, I kind of never scale up to full size. So if I go a little red, I usually still have a chance of recovering to green, and it's just a small green day. And I avoid big red days with this strategy. But I do the same thing that I do each day, each week. So on Monday, I try to just build a little cushion. And then once I have a little cushion on Monday, I'm going to be a little more aggressive on Tuesday. And then if I had a good day Tuesday, I'm a little more aggressive on Wednesday. And so Wednesday is where I peak. And then I try to ease off the throttle a little bit going into Thursday and Friday, because now I feel like, each week is sort of its own race. And now once I've had a good, made some good strides, Monday, Tuesday, Wednesday, I don't want to screw it up on the last leg. So I kind of ease off the throttle. So this, for me, produces very high consistency. So that's really my aim, is being a consistent trader. This is my profit curve over the last 90 days. So over the last 90 days, you can see I've had 3 red days. They were each in the range of about $10,000, which is not, for me, that's tolerable. And of course, you can see my average green days are about $20,000, $25,000. So the red days relatively are small. And this is just what I focus on, having this really nice, smooth, consistent equity curve. So I focus on consistency, and I am a little bit more cautious. So when I start each day at about 6:30, I sit down, I'm a little bit careful, right? I start each day breaking the ice, trying to build a little bit of a profit cushion. If I get some profit at 7, I'm a little more aggressive at 8. And these are between the hours. This is a one hour window starting at 7 a.m. and ending at 8. So from 7 to 8, I build a cushion. From 8 to 9, I add a little more. From 9 to 10, this is where I peak. And then from 10 to 11, easing off the throttle, 11 to 12, slowing down. And in fact, I actually am net negative trading in the afternoons. And as a result of really kind of developing awareness of this pattern in my own trading, for the most part, I've decreased how much I trade past 12 p.m. At this point today, I really have pretty much a hard cutoff that I stop trading past noon, and I just don't take any more trades there. Now, it doesn't mean that you couldn't trade later in the day. We have a number of students at Warrior Trading who are on the West Coast. So they don't sit down at 7 a.m. Eastern Standard Time, 4 a.m. in California. They sit down, at 7 a.m. in California, which is 10 a.m. So they sit down a little bit later and they trade through the afternoon. And although that's not the window where I do as well, there's still some degree of volatility. And these are also traders who are more inclined to trade the 4 p.m. closing bell for the after hours news headlines. So they're going to go ahead and trade this little window here. So I would say, just to add even more depth to this, this is probably European traders, plus early US traders, Eastern Standard Time traders on the East Coast. And then you've got sort of in this window, sort of all USA traders. And then kind of coming into the end of the day, this is where, you may have some traders that are, past Hawaii, over in Japan and in Asia, who are participating a little bit in this sort of window. But you might also get a little bit of that on the very early side from some traders who are trading late at night. So there's a little bit of crossover here, of Asia and Asia kind of at the tail end and the tail beginning. But this is sort of the window that we typically see. So for instance, when I do travel to California, and I do travel from time to time, I've spent a lot of time in California, I wake up earlier and I just maintain my consistent schedule. I know it's tough, but I just kind of keep myself on Eastern Standard Time. When I'm in Europe, well, that's really no problem at all. So 4 a.m., I don't start trading at 4 a.m. Eastern Standard Time, but I start at 7 a.m., which is about 1 p.m. in the afternoon. So 1 p.m. in the afternoon, I trade until 4 p.m. and I'm done. So it's kind of my afternoon pocket. Now, I could, and we do have European students that don't start trading until 4 p.m. in Europe or 5 p.m. in Europe, which is 10 or 11. So they start trading when they get out of work, and then they're trading through the early afternoon. So there is a little window in here that I'll highlight. We'll do it in blue. From 3 p.m. to 4 p.m. 3 to 4 is called power hour. And this is the time of day when you can also get a little bit of heightened volatility kind of going into the close. So it might kind of look like this. Not as much as the news that comes after hours with earnings, but you can get a little pop there into the close. And the reason that happens is because at the end of the day, at 4 p.m., the daily candlestick closes. And so once the daily candlestick closes, that kind of sets in stone a pattern on the daily chart. So as that daily candlestick is getting close to closing, sort of has the last hour, traders start positioning for, I see a pattern here that I think is going to lead to 2 or 3 more days of upward momentum. So now people start accumulating positions going into the close that they plan to hold overnight. And some traders sort of just jump on that trend. Now, there's also a phenomenon where you have traders who sort of were trading something like this green chart that we had here in the background, and we're thinking it was going to, sell off into the close and come all the way back down. But then suddenly, 3 p.m., 4 p.m., it starts rallying back up. They're short, and now they're forced to what? Cover their position. So you can get a little short squeeze during power hour as well. So this is sort of the distribution of the times of day where we see the most volatility and momentum. I choose to focus my trading essentially right now, starting just before 7 a.m. here and ending, let me grab another orange. So this is kind of where I do my trading, kind of in this area here. And part of that is, scheduling. That's what works best for my schedule here on the East Coast. It doesn't mean that I couldn't trade later, but when I'm in Europe, and I do go to Europe quite a bit, I'm not going to trade until the 4 p.m. I'm not going to trade till 10 o'clock at night. That's just not what I'm going to do. I'm not going to trade till 2 in the morning. So European traders very rarely would trade during this long window here because it's just getting too late in the day, right? So, you kind of choose the time of day that works for you. And well, it seems in my experience that this is where we see the most volume and the most volatility. So that tells me that when it comes to people who are trading the US market, the majority of them are willing to adjust their schedule to trade between 7 a.m. and approximately 11 a.m. or 12 p.m. But like I said, there are a couple pockets outside of that where you can find some opportunities. The 4 p.m. pocket of breaking news after hour earnings, and then the 4 a.m. window, early, where you have stocks that are international that have had news overnight and are coming out and releasing that. So now you know the best times of day to trade. And if you want to learn more about my strategy, make sure you check out that small account link pinned to the top comments and in the description. I hope you enjoyed this episode. If you did, I hope you hit the thumbs up. I hope you subscribe, and I'll see you for my next upload real soon. And let me remind you, as always, trading is risky. My results aren't typical, so please manage your risk and always practice new strategies that you're learning in a safe, simulated environment.